are on episode 22 and starting on page 45.
Perfect. Thank you so much, Grace. Welcome to UK Prime Time. I believe everybody's doing good. Sorry, first of all, for being late, but yes, I'm here and I hope everybody liked the web version and have tried it on different devices, iPad, computers, broken phones. It is so light that it works even in phones which were purchased in 2008. We tried it. So, it's so light and it's so easy to operate. Now you can swipe using old phone, old Android versions, old iOS versions, and it works perfectly fine. You don't need Telegram, you don't need sophisticated devices to operate our I would say, our whole ecosystem into one single browser can be operated. The only thing that you need to keep in mind is to ensure that you have secured your private keys, you have full control of your email that you are using Rift account with. That is the most essential part, and it is something where we cannot help as a team as well. So make sure while, because with the web version we will have a lot of these challenges where people will have their emails compromised, and uh, because of the browsers, if you'll give your phone somewhere to your friends, or you give your phone to get it repaired somewhere, your private keys can be exposed because you are logged in to any device. So make sure you keep close attention to ensure that you log out of the Rift app and you log out of the email as well. If you hand over your device to somebody else, this is going to be uh, you know a very big challenge for all of you to you know when it comes to security and safety of the credentials. Perfect. So where were we? 45 we finished.
Yes.
So today we will start, and we'll take it from the argument why win rate means almost nothing. We discussed about prop trading, we went through once again, and while going in detail, today we are going to get deeper into win rate, and then today we are going to also study in detail about the parameters with which institutions, with which prop firms, hedge funds, they kind of rate, and they basically assess the traders or the participants. So, starting from win rates. One of the biggest misconceptions in trading is that a higher win rate automatically means a better trader. Nothing could be further from the truth. Consider two traders. Trader A having win rate of 90%, average profit of $100, but average loss of $2,500. Whereas trader B making 45% at 45% win rate, where average profit is 2,400 and average loss is $600. Which trader survives longer? Of course, most beginners will choose trader A because of the win rate is 90%, but professional firms immediately choose trader B. Why? Because institutions evaluate expectancy, not emotions. They know that one catastrophic loss can erase months of small gains. This is why some of the world's greatest traders historically operated with win rates below 50%. Their edge came from asymmetric risk management. If we look at most successful trend following funds, they have historically operated with relatively modest win rates while maintaining strong long term performance through disciplined sizing and favorable risk to reward profiles. This illustrates why institutions focus on overall distribution of returns rather than individual winning trades. And that is the core principle, that's the core philosophy on which the engine works. win rate versus expectancy. Higher win rates plus large losses leads to poor long-term results. But win rate, which is consistent and there are controlled losses and there are large winners, that cumulatively becomes institutional performance. So winning frequently matters less than managing losses effectively. How hedge funds rarely evaluate traders. Institutional firms rarely begin with profits. Instead, they begin with risk. A portfolio manager might produce 30% annual returns, another might generate 18%. Which one receives more capital? The answer depends entirely on how those returns were achieved. What was the win rate and what was the loss at which the win rate was 18 or the annual returns were 18 or 30. So the professional firms evaluate traders through dozens of performance metrics, not because they enjoy complexity, but because every metric answers a different question about capital preservation. This is one of the core principles on which the funds they operate. Capital preservation is not just uh, you know a concept or just a metric, but it is the overall performance indicator through which with which the evaluation is done as a whole. Among the most important are Sharpe ratio, Sortino ratio, maximum drawdown, profit factor, recovery factor, alpha, beta, volatility, correlation, position concentration. And together these measurements they create a far more complete picture than profit alone. So this is the information institutional performance dashboard on which the performance of a trader or a fund or a strategy is basically formulated. Institutional decisions are based on multi-dimensional performance analysis, and let's discuss each one of them in detail. Sharpe ratio. Sharpe ratio is one of the most widely used performance metrics in finance. It measures how much return is generated for each unit of total risk taken. A trader earning 20% annually with relatively low volatility may receive a higher Sharpe ratio than a trader earning 35% with highly unstable returns. Institutions generally prefer stable, repeatable returns over unpredictable growth. High returns alone do not necessarily indicate skill. The quality of those returns matters just as much. Sharpe ratio. Sharpe ratio measures return per unit of total risk. Higher the Sharpe ratio, better risk efficiency is there. So you maximize returns, minimize risk, and improve Sharpe ratio. And let's do after Sortino, we will do a comparison as well. So while the Sharpe ratio measures all volatility, Sortino ratio focuses only on downside risk. This distinction is important. Investors generally welcome upside volatility. They dislike downside volatility. Sortino therefore provides a clearer picture of harmful risk. Many institutional investors consider it one of the most practical measures of portfolio quality. Sharp versus Sortino. Sharp ratio measures all volatility while Sortino measures only downside risks. It focuses only on downside movements. Not all volatility is equally harmful. Maximum drawdown. Maximum drawdown represents the largest decline from a portfolio's highest value before reaching a new peak. It answers a critical institutional question. How much pain must investors tolerate? Two traders may produce identical annual returns, but if one experiences 12% drawdown while the other suffers a 45% drawdown, institutions almost always favor the first. Lower drawdown preserve investor confidence, improve survivability, and reduce recovery requirements. Because we all know a drawdown of 50% leads to a point where 100% has to be generated once again to come at break even. Drawdown recovery comparison. Again, the same thing that I explained. A small recovery versus a small drawdown versus a large drawdown. takes the trader along a large recovery curve and takes exceptional talent or exceptional market condition to get recovery. Profit factor. Profit factor measures the relationship between gross profits and gross losses. For example, gross profit is $250,000. Gross loss is 100,000. Profit factor is 2.5. A profit factor above 1 indicates profitability. So, this is a task for you all to calculate your gross profit factor in total till date. So the number of trades that you have done manually on Rift, in spot futures, in swipes, if you calculate your gross profit versus gross loss, you will get your profit factor on dividing both. I will give you formula as well, and then everybody can do this. And in the next session when we meet, I'm going to ask you what's your profit factor. Higher values generally suggest stronger efficiency, although institutions interpret this metric alongside many others rather than in isolation. And depending on your profit factor, now we will do a comparison also. I recommend every one of you to create an Excel sheet or create a performance indicator, especially for those who wants to professionally go forward and achieve, uh, you know, or to participate in um this prop trading challenge. Especially those of you, please prepare a list or make sure that you record your profit factor month on month, week on week, and look at your own improvement. It will be a good factor to introspect as to how your trading is going on. So, and that would lead you towards, an improvement curve within yourself with your performance tracking. So with this, you'll be able to track your own personal performance as a trader. And I think with this, you all will be ready and more closer toward clearing the prop trading challenge. Recovery factor. Recovery factor measures how efficiently a trader recovers after experiencing drawdowns. Markets are unpredictable, losses are unavoidable. The true measure of professionalism is not avoiding losses, it is recovering from them in a disciplined manner. A trader capable of rebuilding capital steadily often demonstrates stronger long-term resilience than one pursuing aggressive returns. Drawdown recovery speed, creates the recovery factor. Position sizing, the science of survival. Professional traders understand one fundamental principle. Position size often matters more than market direction. Even an exceptional trading strategy can fail if position sizing is excessive. Institutions use structured frameworks to determine how much capital should be allocated to any single opportunity. Common approaches include fixed practical position sizing, volatility based position sizing, value at risk, Kelly criteria, portfolio exposure limits. Uh, you all can take notes of these um, position sizing approaches and do some research and understand each one of them. Uh, if I mean, especially for those who are, interestingly preparing or making themselves ready for the prop trading challenges which are coming up. The objective is straightforward: ensure that no single trade can materially damage the portfolio. Um, have you guys taken the notes, or should I stop here for a while?
Probably most people have taken a screenshot.
Yeah, perfect, perfect. Real marketing. Many institutional firms impose strict limits on position concentration, sector exposure, and portfolio risk. Individual portfolio managers rarely have unrestricted discretion over capital allocation. Professional position sizing, capital risk per trade, position size, and it basically creates a controlled exposure which tends to lead a trader towards long term survival, which is ultimately what? Capital preservation. Everything is drowning in the same sea of capital preservation. By now, one thing should be clear: professional capital is not allocated to the trader with the highest returns. It is allocated to the trader who manages risk most effectively. Institutions reward consistency, discipline, controlled drawdowns, efficient use of capital, repeatable decision making. This is why successful portfolio managers think less like traders and more like risk managers. Because preserving capital creates the opportunity to compound it over time. And as technology continues to evolve, these institutional evaluation frameworks are becoming increasingly data driven. Artificial intelligence can now analyze thousands of trades, identify behavioral patterns, measure consistency, and support more objective capital allocation decisions. We have discovered that professional trading isn't really about trading, it's about capital allocation. Institutions don't simply ask whether you have made money. They ask, was your risk justified? Was your behavior consistent? Could your strategy survive another market cycle? Can larger capital safely be entrusted to you? For decades, answering these questions required teams of analysts, portfolio managers, and risk committees. But financial markets generate enormous amounts of data: millions of trades, millions of positions, millions of behavioral decisions. No human team can continuously analyze every participant. Artificial intelligence changes that. For the first time in financial history, institutions can move beyond periodic reviews towards continuous analysis. The future of proprietary trading may no longer depend on passing a single challenge. It may depend on continuously proving your ability to manage capital. Today, we'll explore how artificial intelligence, dynamic capital scoring, and autonomous infrastructure are beginning to reshape the future of professional capital allocation, the evolution of trader evaluation. Manual observation, then performance reports, then risk teams, data analytics, artificial intelligence now, and it basically does what? Continuous evaluation in real time monitoring with the help of AI and with the help of performance reports, which are managed manually by risk teams, and there is manual observation as well from the institutions. AI is changing how traders are evaluated. Artificial intelligence is often misunderstood. Many assume AI exists to predict markets. In reality, one of its greatest strengths lies elsewhere. It excels at recognizing patterns that humans often overlook, patterns hidden within thousands, even millions of data points. Every trade leaves behind information, not just big profit and loss, but timing, risk, holding period, position size, market conditions, behavior before entry, behavior after exit, frequency of rule violations, consistency during volatility, reaction to losses, reactions to gains. Over months and years, these behaviors create a measurable profile of every trader. Instead of asking, did trader make money? AI can ask, how did this trader make money? This distinction changes everything. Every trade creates data: trade, execution, risk, behavior, performance, AI analysis, and that leads to evaluation of the institutions. From static challenges to continuous evaluation. Most retail prop firms today operate using familiar model. A trader competes, and evaluation meets predefined objectives, receives funding. The assessment is largely front loaded, but professional institutions rarely think this way. Capital allocation is not a one time decision, it's an ongoing process. Portfolio managers are reviewed continuously. Risk exposures changes daily, position limits evolve, allocation increase or decrease based on sustained performance. The future of proprietary trading may increasingly reflect this institutional approach. Rather than asking whether someone passed a challenge 6 months ago, future systems may continuously ask, are they still disciplined? Are they adapting to changing markets? Are they respecting risk? Are they maintaining consistency? Evaluation becomes continuous rather than Episodic, traditional versus continuous evaluation. Dynamic capital scoring. Imagine two traders. Both begin with identical allocations. 6 months later, trader A produced steady returns with disciplined drawdowns and consistent execution. Trader B generated higher short term profits but also experienced larger drawdowns, greater volatility, and inconsistent risk management. Should both continue managing the same amount of capital, institutions would likely say no. This introduces the concept of dynamic capital scoring. Uh, Highlight it where you are making notes. Rather than assigning capital permanently, future systems could adjust allocations based on measurable performance. Higher consistency, higher score, greater capital access, declining discipline, lower score, reduced allocation, capital becomes adaptive. Dynamic capital scoring. Then autonomous prop in trading infrastructure. Let's cover this probably on Friday, and then we close 22 with bunch of questions, and then you'll be able to reconcile 22. As I promised, we will have questions as well. So let's close tonight's lesson at dynamic capital scoring, and we continue further in autonomous prop infrastructure from Friday onwards. And before we close for the day, let's have a look at the web app one more time. I hope everybody looked at the web app.
Oh, yes.
And how many people looked at the new website and branding kit?
Oh. It is amazing. It is absolutely amazing.
We are still making a lot of updates in that, but now you have a complete branding kit which will be, which will help you market the product in a more professional way, and you will have the understanding as to what needs to be done overall in terms of uh, you know logo placement, what not to be done, and what needs to be done. So you have now the web app. I'm sorry, I have selected Vietnamese here, so it's all coming in Vietnamese. Okay, so I think web app is something that I don't need to show. You all have, and you all might have played a lot with the app. Any bugs, any problems, any shortcomings that anyone faced in the app so far?
I have not.
Also, yeah, perfect. Also, with this having delivered, we are ready to get into 100x hyperdrive. Can't wait to announce uh, about that. We are preparing the onboarding journey of new users, and also we are preparing for deployment of academy and prop trading as well at the same time. So, and while we do that, shall we start 100x hyperdrive from Friday? I mean, we are ready. We are so ready. We just have few last onboarding steps to finish, and then we'll be able to push it live. So probably by Friday we will announce the 100x hyperdrive for sure. So be ready. Make sure everybody joins Friday's call to get first-hand information on what is hyperdrive, what is going to be your takeaway from 100x hyperdrive, and how you are going to push yourself, or get a 100x push from the institution side that we are giving you. So I think it's going to be really exciting from Friday onwards how we are going to look at Rift and how we are going to look at the whole, you know, ecosystem thriving and moving towards the prop trading infrastructure. It's going to be great. Can't wait.
Looking forward to that. Does anybody have any comments from the panelists? Comment or questions?
Just hi, Chavez. Huge congratulations to all of us on our website launch. This is, such a professional website. The team has done an amazing job. So congratulations to you and your development team because only like 4 months ago, we started this on the mini app, and within this 4 months, all the hard work you guys have done to deliver this so quickly as well. I feel like it is quite quick. And such a good website. Everyone he's messaging me saying it looks very professional. They feel very proud of it when they're showing it to people. As Joe said, we now look like a professional trading website even. When we go on to futures and swipe functionality, it looks amazing. So it's a great job, well done. And my question was going to be around hyperdrive. When can we start? So you've already said that. We start from Friday. It would be great. Can't wait for that.
Mhm.
And so Academy, you talked about already, Chavez. You said we should have it soon for the Rift Academy.
Yeah, the promotion that we are going to run, the
Mhm.
100x Hyperdrive is going to run till we touch Academy. And the moment we touch Academy, we are going to push the prop challenges also live from the prop trading firm.
Okay.
So
Wow.
Academy is a part of prop trading firm.
Okay. All right. Okay.
Mhm.
Thank you.
There
And
is
before,
this. Go ahead.
sorry, yeah, Grace, go ahead. Go ahead.
No, no, no. Please finish.
I think before we get into Academy, we will be covering so much in these episodes that you all, if you all are seriously making notes and doing some research in the background and seriously putting your heads into this, then you all will be ready for the prop trading, I believe. Because I'm also doing the same. I'm also, you know, personally preparing that I'm going to appear into challenges, and I think, yeah, we will give it a try together. I am not a professional trader, I've never been, but I'm going to learn while I'm formulating this. While the team designs the prop trading challenges, I'm going to also, you know, organically learn and, sit with you all in the competition with the same level. So if I can, I mean, push myself to do that, you all can do this. I mean, it's for the money. You'll all have a lot of money to operate with. It's not harmful.
Well, I mean, but Chavez, I don't know really, honestly, because you're a professional student.
Mhm.
And and as a professional student, you're a professional teacher. We really appreciate all the information that you impart. There is a suggestion, though. Can we have a little side merch area so we can go ahead and get Rift shirts? Somebody is suggesting that Rift t-shirt merchandise. That would be
Uh,
absolutely amazing.
I think we have in the branding kit, and we have already given the designs in the branding kit. So everything can be done by people. They just have to download the design and send it to a designer online, and they will get it delivered. There are many websites on internet. They give the predefined, solutions, and very cheap it is. I think $5, $6 a piece anyone can get. So
Amazing.
that is why we have the branding kit in place.
Amazing. That's fantastic. Um, any questions? I, I don't know if we're going to be visited by Chantel Leaks today. I don't know. Okay.
I
No,
just want to
no.
say that I love the branding kit. I think it's really beautiful, and I just am very curious about the hyper drive. And I won't ask Chavez, can't you just tell us what your plans are? I will just leave it until Friday.
Please, please. Until Friday, you all are free to build more excitement around it, and yeah, bring everybody in to the party. Yeah, and Friday I'll announce it, and Friday I'll try to push it live on this call as well. So yeah.
Okay, we're getting ready to go ahead and wrap up. Now, one of the things that Chavez, thank you so much for emphasizing, and I know that Sheba Joe does this all the time. We used to have training on it, is security.
Hmm.
Security, security, security. So thank you for emphasizing that because some of us are not thinking that we do need to log out of our Rift and log out of the email, especially when using the website, the web
Hmm.
application. So folks, please, if they take nothing away from anything, please always be conscious of security. It's so important.
And while you show the app to somebody, you log in to their device, make sure that while you log in, there will be private key that will be displayed again, just like me when I did. So make sure that you keep the private key with you and do not, let others copy your private key. If private key is gone, then everything is gone.
So log in first before you even start to show someone something and make sure that your private keys are secured or hidden away.
Of course, of course.
Okay. All right. All right, folks. There you have it. And so please be very, very conscious of security. If nobody has any other comments or questions,
Mhm.
then we're just going to go ahead and call this a wrap. Ladies and
Sure.
gentlemen, don't forget, tomorrow, please join us for a wonderful presentation. And then the call is out there. You've heard it here on Friday.
Mhm.
We
From
have to be
Friday, presentations are going to be changed. I'm giving you guys a hint.
fantastic. Okay, so we'll see you tomorrow and we'll see you definitely on Friday. Thank you all so much for being here. Your leaders are wonderful. Thank you, though, for being here. Thank you, Chavez. Lucky, Chantal, Shiba Joe, we'll see you guys later. Bye bye.